Good morning. It's Market Day Report. We're so glad you're with us here as we work our way through a Wednesday. By the way, it's a new month and a new quarter. That's right. Yesterday, we wrapped up the month of September. We also wrapped up the third quarter. So how do we trade as we head into the fourth quarter now? Well, let's start with the corn market. In the overnight session, lower. 412 3/4, down 2 3/4 cents, extending the losses from the day session. November beans, 5.5 lower at 9.96 1/4. What about wheat? Well, lower here, down a nickel on the December at 5.03. And hard red, 6.5 lower. Look at that. 4.91 1/4. I'm choked up over it. I can't believe we've dropped below $5 here in the HRW. And cotton, 55 lower, 65.22. He's the president of Midwest Market Solutions. It's Brian Hoops. All right, Brian, I'm all choked up here over lower prices, but how much of that is tied back over to our quarterly grain stocks report out yesterday?
Well, good morning, Tony. Yeah, that report was interesting, wasn't it? So if you go back to the August supply and demand report, the USDA has come up with about 3.5 million acres of extra corn that was planted from what they had said was planted in June. That works out to be about 650 million bushels of new crop supplies. And then with yesterday's report, there's another 200 plus million bushels of old crop supplies. So you're looking at 850 million bushels that are increasing the supply of the corn market during this harvest time frame. I really think the stage was set for the USDA to drop yields next week in the supply and demand report. And if we have that report, we would see the yields come down and kind of offset some of those increase of acres that they found. But until they do, we're left with this bearish tone, bearish situation here where we're going to have to anticipate ending stocks are going to be quite large and likely to grow from here. They could be close to 2.5 million bushels, 2.5 billion bushels versus 1.5 billion last year. So there's definitely a fundamental bearish trend and definitely a negative tone in all these markets. For the corn market, you have this increase in supply that we just can't handle this much corn that we are producing. In the wheat market, we not only increased supply yesterday here in the U.S. with the second largest wheat yield in history, we also increased ending stocks. And you also look around the world and the supplies are increasing on a worldwide basis. And of course, soybeans have its own negative demand situation. Exports are 17-year lows without China buying any of our soybean markets. So each of these three commodities have their own negative fundamentals. This week, soybeans and now corn, as of yesterday, have started to enter into technical downtrends, which is likely to encourage the fund selling that we're seeing in the wheat market. So as a producer out there, you really have to be careful with trying to store this crop and thinking the markets are going to rally when you have these bearish tones in place. Carries that are being offered are unlikely to be met.
So, Brian, in that grain stocks report from USDA, and by the way, these could be the last reports for a while, but I did find a couple of positives in here. We had to dig a little deeper. Barley stocks are down 3% from last year. I don't know that this is bullish, but oat stocks 3% above last year. Sorghum is up 22%. That didn't really catch many in the sorghum industry by surprise with the loss of China as an export customer. But here's one for you, down 63% from a year ago, old crop sunflower. So there was a bright spot in there, I guess, if we were digging for one. Speaking of digging, how about we dig into the livestock markets? We've got that right around the corner. Where could we go here in the fourth quarter? Brian Hoops will try to answer that. Market Day Report continues in a moment. So a lot of focus yesterday on a couple of reports from USDA. Obviously, we get the small grains, the annual report out, and also the quarterly grain stocks. But let's not forget the market was trading for proteins yesterday. What about the cattle market? Live cattle futures finished the session higher, up a half buck on the front month October, 231.82, and the D's at 234.80 was 97 higher. Feeders also higher on the session, gaining 605 on both January and the March contract. It was November at 359.70, up 582, and a dime off the day's high. Hog market, though, lower now for its second consecutive day, and the October slipping below that 100 level. Helping us break it down, Brian Hoops, Midwest Market Solutions. Brian, what's driving the proteins?
Yeah, should note that we will have the census crush report out this afternoon. Trade is expecting a record crush, so that will be released. One of the few reports we expect will be released. This government shutdown, last one we had, it lasted about 35 days, but the stock market has responded favorably during the history of government shutdowns. They've averaged about 11% gains during the time that we've been shut down. So we'll see how long the shutdown lasts. There's another vote today, and unlikely it'll be passed, but maybe at some point they can get things worked out. Otherwise, you're really left without a lot of these key government reports, specifically on a daily basis for the cattle. No cutout values, a lot of these the hog markets rely on cutouts, and hog weights that were usually released this morning are unlikely to be reported until the government shutdown is averted. So we're looking at cash trade as kind of one of the main driving forces here. The feeder cattle market, not as bad as feared, is probably the best way to describe the sale barns this week. They were steady to about $3 lower in Oklahoma City, pretty steady in Yankton, South Dakota this week. So that, I think, is helping the feeder cattle market rally yesterday. Meanwhile, live cattle, the cash cattle in the Southern Plains still called steady to slightly lower, and probably going to see more weakness in the north compared to Southern trade this week.
All right, Brian, it's always great to see you. Thanks for popping in. Brian Hoops is president of Midwest Market Solutions.